Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linden Associates with your financial market wrap-up for this Tuesday, the 15th of August, 2017, just after 4:10 p.m. Central Daylight Time. So it was another day where risk premium came out of the market. You see that very clearly if we take a look here at the bonds and notes. They were both down. The Japanese yen, premium come out of that, almost a full cent, if you will. The gold market gave back quite a bit now, another $10. So the 1,300 level we've given up on temporarily. You're about $20 off that number. Silver down 40 cents today. Dollar up, and a number of the grains down. Now, the grains didn't give up anything in the way of safe haven plays. It's just a stronger dollar, bigger crops weighing on them. On the energy markets, just sort of sideways here, the market saw the API numbers, wasn't very impressed with anything in it, so just sort of sitting, if you will, at this point. So taking a look at now how the NASDAQ is looking, we've got a market that's gone up. It's still in what I'm calling an up thrust on the weekly chart. You have not gotten back under this low, but something changed today. If you take a look, see this bleep down yesterday's close, and we can look at it right here. Should the market close under 58.38 and a quarter, and the market's 59.12, so it's bounced up there quite a bit from that move, I would then say the market's in a down thrust. So I'm just looking to see how this is going to play out. When I come over and I look at the daily area chart, get over 59.37.75, and I'll flip-flop and I'll say the market's in an up thrust on this chart. And those are just charts of closes. They're certainly not charts that I use to trade off of, but I like to look and see the thrust of a market. Now, when we go to the daily bar chart, I think you'd agree we have a market that's just marking time here, seems to be stuck in a range, if you will, went to the 6,000 level, back quickly, just over 57.60, and suddenly back up 200 points from there. So very quick moves, but very indicative of a summer move where the market's looking for direction back and forth. The chart pattern is one of, on the swing line, a higher high and a lower low. Now you get an all-out sell signal on the swing line if prices take out today's low and don't revert back over today's high after doing so. If the market just goes over today's high, that doesn't count the way that I'm saying. And that's the way that the swing line is set up. Also, if you take out today's low, you will also be under the 18-day average of closes. So you'd have two elements that kick in there. Number one, the swing line would turn down. Number two, you'd be under the 18-day average when that occurs. When we look at the Bollinger Bands, I'm saying the market is caught in this band right here, so that might carry, if the market worked out perfect on a decline, back to the 58.30 level. If the market keeps going up from here, 59.75 might be where the market would go. However, if you go up, you cannot get a trend to turn on the swing line. You can only get a trend to turn on the swing line if the market breaks. That's because of how the chart pattern is right now. Momentum is fighting that. So you have divergence. You've got the momentum pointing up, the potential for bias to turn down if you get under today's low, and the swing line, a confusing chart without any question. It's a little easier, or is it, in the S&P? Not really so. In the S&P, you've also got the pattern of a higher high and a lower low. Keep this in mind. If you should just keep rallying without taking out today's low first, well, that would be your resistance. Now, something else can happen. That's why days like today against the 18-day average, you lay them all out. Let's assume the market takes out today's low, reverts back up, and then after that takes out today's high, because it is a narrow range day. It's all of a 13-point range. If that happens, and if the market were to close higher on the day over the 18-day average, you get a buy signal. So in plain English, you're at important junctures on the market. That is not the case in the Dow. In order for the Dow to get a sell signal, you'd have to take out 21,790. That's 200 points away in rough figures. If you went through 22,034, you'd still have the pattern of a lower low and then a higher high. This doesn't qualify the way that the S&P and the Dow do. In the Russell, all you did is because you broke so much under the lower Bollinger Band, you rallied back to the 100-day average and found your resistance there. Should today's low be taken out, more in line with what we said in the NASDAQ, you could make a lower low, come back. You couldn't get a buy signal. By the way, you can't get a buy signal on this chart unless you would have a big outside day up and then close over 1413, but you could get another sell signal. However, you're so oversold in the market, why would you take it? In essence, the stock indices are not the place to be from the looks of the chart action. Day two of even lower in the VIX. So each thrust up in the VIX has not held at all. And I cannot say that they're forming a bottom because these lows are lower lows along the way. It's just one of these times of difficulty in this market. The momentum is still pointing down. Prices are still over the 100-day and the 18-day average of closes. Very difficult chart. What do we have tomorrow? I think we get our Fed notes. So tomorrow we're going to get in the afternoon the notes. We're all going to look over them. We're going to see if the Fed is diverging in any manner. I think that what we'll see is more or less the same. The Fed wants to start shrinking its balance sheet. But people understand they could shrink that balance sheet over a decade. It doesn't have to be a 1, 2, 3 year process. It can be a very long process to not influence the market. Just as everything comes maturing, they're not reinvesting. There's a lot of 10-year notes in there. So understand just exactly how that plays. The second part is the information we're getting picked up. The New York, let's see, the Fed, the Empire Index picked up today. It was strong as can be. Retail sales were strong as can be. So there's some things that are shifting. It's August. I'm going to continue to say that the marketplace does not think a September rate hike is on the table. December is still very much one of these deals that's going to go like this in the polls, up and down, back and forth, as we get closer and out of the summer into what the fall numbers look like. But right now in the bonds, today's break low took out this low. So now you have a market that's void of trend. You have a higher high, a lower low. The bias stayed up because you're over the 18-day average, but momentum turned down. Everything's fighting itself on this chart. In the 10-year notes, the trend is still up. The market still has a pattern of higher lows, higher highs. However, if you believe that that's staying up, what about the bias? The market closed at 126.05, literally on the 18-day average of closes with momentum turning down. I would expect nothing out of these charts right now until they get a chance to view the Fed notes. As we look at the September dollar index, it has a pattern of a higher high, a lower low, rallied today, didn't quite make it to the upper Bollinger Band, missed it by 3 ticks. Momentum is still to the upside and the bias is up. So you could get up there and then probably run into a brick wall, as the flip-flop in the euro currency might be happening as this market's heading lower right now with a pattern of a higher high and a lower low. Very difficult charts to trade off of. And this should not be a surprise. Learn that in August, especially the latter part, many traders around the world, I'm talking the head traders of FX desks, things of that nature, they do take vacations. They do spend time with their family. This is that time of year. That doesn't mean everything goes away. It's just you get these gyrations like you're getting right now, and I see it year after year often. The word is often. So this is not a surprise for the end of the summer. Aussie dollar made a higher high, a lower low. It's running the lower Bollinger Band in an oversold condition. Japanese yen, today's break in the market got down to 90.34.5. The last break low was 90.31.5. However, while the trend is up, you still have the pattern of higher lows, higher highs. You lost the upside bias. You closed under the 18-day average of closes. You're honing in on the 100-day average, and momentum has turned down. In addition, the market has just gone back to the 18-day average to regroup. Crude oil, still to me, looks like it's in a bear trend, but oversold. So you can get a pop for no reason now. You've got the lower highs, the lower lows, very oversold, pretty formidable resistance at 48.65. We'll have to see what the market does. Remember, you're going to get the 9:30 EIA numbers tomorrow. Gasoline held what number? If you knew nothing more, here's your 100-day average, your next support level. Market went to it, held it. Oversold in a downtrend, difficult trade right here. When you get these type of trades, what I teach people is there's a point where you pick up your chips and you say, okay, maybe I shouldn't do anything right then and there. You did have follow through in the nat gas from yesterday's outside day down. You made today a lower low. Momentum is turned down. You have no trend. You have a lower low and a higher high. Again, a difficult market. Why get involved if you don't have to? And that's what I talk about. You know, so many traders come out and they always have to have a trade. There are days you don't have a trade. There could be days, plural, in a row where it doesn't set up. When they set up, your job is to be there and try to do the right thing and hope for a good outcome. And I'm going to use that word over and over, hope for a good outcome. No matter how the chart pattern looks at the end of the day, if you knew, you'd bet the ranch. You don't know. And what I try to do in the morning is I set you up with a series of ideas and trades for the day if they're there. If they're not there, I promise you, I will spend time doing just what I'm saying and say, I don't see anything on a chart. But unlike what I do in these videos, I'm able to say in those videos, buy here, sell there, have a stop, take a profit. Can't do that in these videos. And the reason is my YouTube videos that you're watching are for the general public. Government says can't do that. I can talk the generality of what charts look like, but not the specifics. This is where you get everything. So if you haven't tried a 20-day trial, we're coming to the period where I call the beginning of the September timeframe where the game takes off. It's like a reset in these markets. Why not get yourself set up? If you haven't taken my charting course, you might want to even look at that. But I will make available to you, if you haven't tried it, the access to my morning video where I really set my subscribers up for everything that I'm seeing during the day. Believe me, I write a report at night and they have an idea, but this is where they get to see the charts. And my reports will look like this: commentary, specific trade recommendations if I have them. You'll see the good, the bad, the ugly, okay? It's going to be every which way. And then oral commentary. So if you'd like to try this, 20 days is basically a month, but we do it by the day, not by month. You get a free 20-day trial. Call us. Go to our website. You can always call us, remember. You can click up here if you're watching me on YouTube, and underneath us, it'll say, click here for Ira's free offers. Do so, and away you go if you see this video on other websites. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow.